Hey everyone, happy Thursday, January 8th. It's about 11 in the morning and welcome to 2026. First market update of 2026. I skipped the last couple weeks of 2025. I figured you guys were busy with family and the holidays. You didn't want to hear me ramble on about inflation and jobs and mortgage rates anyways. And to be honest, not a lot happened over that time period. Back in the real world now that the clock is, or the calendar is turned and we're in 2026. But I wanted to go over one thing that happened over that time period that I thought was really important first, and that was the QCEW report. This comes out quarterly, and it's basically the Quality Control, Employment, and Wages, I believe is what it stands for. And so this is basically where they go back and take all the job numbers we've seen over the last year or quarter, whatever it may be, and actually count them up. Not doing weird math, not doing weird formulas, but actually coming up with the real numbers. And it was a little alarming and very eye-opening. So this came out for the quarter two, from so basically July of 2024 to July of 2025. So a little dated, but again, this is when the job market was supposed to be really, really hot. We couldn't cut rates because the job market was too strong. So starting over here, initially when the BLS comes out with their job report, that time period, that quarter, from Q2 to Q2 of 25, they showed 1.923 million jobs created with their first numbers they gave. Then, as you know, they do some revisions for the first 2 months after they release those numbers, and they always come in lower, which we don't like, but they do. And that came in when the BLS did their own revisions. It came in at 1.534 million, so it dropped by almost 400,000. That's a big drop, right? So we didn't like seeing that. That means they're not accurately counting these numbers. The markets react to the first number that comes out, and so forth. However, the QCEW then goes back and, like I said, they actually count all this and come up with the actual numbers. And it was an alarming only 420,000, less than a million, 420,000 jobs created. Is what they showed in that same time period compared to 1.923 million. So over 1.5 million more is the initial estimates. And then even when the BLS did their little adjustment, still over 1 million more than that, 1.1 million. So basically the difference here, the overstatement, 1.114 million, 73% overstated from their final number, 78% from their original number. And as we've talked about, this birth death model, that's where the BLS try to comes up with job creation numbers, and they use this number where they're trying to figure out how many jobs were created by small businesses opening and how many jobs were lost by small businesses closing. And that number is not very accurate. We all know this, but they seem to use it. They continue to use it. And as you can see, that number, what they came up with for that same time period was 1.19 million, kind of matches up exactly with that overstatement. So we can almost, draw a line there and say the overstatement is all this birth death model. But again, this is alarming. They were off by so far, such a huge amount. And the markets react to this initial number. They barely react to this number. And, again, the markets paid attention to this, but we're not going to get that same, pop we would have got if, the jobs were just reported accurately to begin with. Through this whole time period for that whole year, these jobs, everybody was saying the job market's really strong, but it was not. And if that was the case, if it was accurately portrayed to everybody, the market's mortgage rates would be a lot lower right now. The Fed rate would be a lot lower right now. So this was, again, alarming, eye-opening, whatever, flabbergasting, whatever term you want to use, but very, very, very off. Compared to quarter one, now it's 52% overstated. So basically January, June, only 28,000 total jobs were added. And again, right here's unemployment rate. Just draw a straight line. You can see unemployment since February just going straight up, right here. So again, this all shows the job market isn't as strong as they said when it was strong. And if anything, it's starting to show weakness what we see, after this time period. So it'll be very interesting to see how bad it looks once they come up with these numbers for Q3 and Q4. So that was the one thing that came out over that time period I want to share with you guys, because again, it's very important and it's very bad that these numbers are not reported accurately to begin with. Next thing, so we're in jobs week. We jumped right into jobs week. So we got the December ADP was the first one. We got that yesterday, and it came in at 41,000 jobs created. It was supposed to be about 50,000, so still lower than expectation. Still doesn't show, better than this negative number they got the month before, but still shows a slowing job market like we were just talking about. So that's when we got yesterday, and then we also got the JOLTS report for November. That's where they try to figure out how many job openings there are across the country, and that was supposed to come in at about 7.7 million, and it came in at 7.1 million. So a big miss there, and obviously the more jobs available, the stronger the job market looks. So that's basically saying, hey, again, the job market is not as strong as everybody was saying it was, including Fed Chair Powell. So what does that leave us? Average 30-year conventional, when we left December 18th, I did the last video, we're at 6.22. Today we're at 6.21 according to that lender survey. So it made a huge difference. It dropped by 0.01 in that 2.5 weeks or so. So again, things were pretty flat over the holidays. Basically the markets took the holidays off as well. So what do we got upcoming? We got the BLS jobs report tomorrow. That's the big one. We were just talking about it. That will probably come out higher than it will be revised down to, and then that number will be even higher than the QCW will come up with. So, but again, that's where the unemployment number comes from. This is the big jobs number. That's what we're all looking at right now. PCE inflation is to be determined when that next report will come out, and then the Fed meets again at the end of this month, January 28th. So 20 days away. So we're gonna have to see. We're gonna have to keep seeing inflation stay where it's at, keep seeing job market weaken, hopefully. And then right now, it's kind of a coin flip, leaning towards not cutting rates at January 28th. But obviously, we'd like them to cut rates and continue to cut rates. So I hope everybody had a great holiday season. I hope everybody has a safe holiday season. And if you need anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.